you have a degradation of the money in it over time. And this is true with all the major unbacked currencies. And I think this crisis that we're about to face will expose that, especially our debt ratio, such that the bond market will be in total jeopardy. Not a comfortable place to be ultimately. I don't know what's going to happen to it, because it's not just going to be a dollar degradation versus other currencies. It's going to be all of the fiat currencies will suffer and be perceived as non-money. Now that's already happening in some countries in the world. China's, behaving in that manner, which is kind of unusual to think, quote, a communist country is effectively endorsing gold as the backing of a currency. Something's wrong there. They're right in their perception. And I think it's going to come back to the US at some point. And I think the bond market crisis may help facilitate that. But for the moment, the T-bonds are, quote, a safe place to be. And I think that's one of the reasons why we're going to get another upside in T-bond prices, is because of asset managers, if they get spooked a bit by the stock market, like if we start to break the triggers I talked about in the S&P and the NASDAQ 100 especially, that money flow is going to occur. And also it's going to move more into the gold miners as well. We already know that there's some major asset managers that in the last 6 months have moved out of some tech stocks and into major gold miners. And I think that will be another place that money will flow once the stock market gets rattled.